Trading became easy when I realized direction didn't actually matter. 90% of traders tell you to trade with the trend, that you need to find and follow your daily bias. But 90% of traders also lose money. And so for the past year, I've only been taking reversals, catching small reactions in price action, and not caring about direction at all. And I've never been more profitable. And so these are the results over my past year of trading. Just reversals, not caring about direction at all. And it's actually insane how much more profitable I've been. And trading is easier, it's less complicated, and I'm more consistent than ever. And so in this video, I'm going to show you my exact strategy to profit regardless of what happens, how I make money even when I'm wrong. But first we need to understand how price action actually moves. You see, price is elastic. It's like an elastic band. The further you stretch in a certain direction, the more you are for that elastic band to snap back. Think about it like this. As price action pushes in a certain direction, the further you go up in that move, the more tension increases. That elastic band is being stretched. So if you go too far, you'll have a snap back. And the whole point of this strategy is to identify these stretches in price and then take advantage of these little snapbacks. For an example, we've had a stretch here, and this has actually resulted in a shift of market structure. So you think you'd be wanting to look for buys, but I would actually be looking for a sell here for a correction of this overextension, this stretch of this elastic price action, just for that little snapback here. And so regardless of where the direction is going, where price action is moving, it could push bullish, it could reverse and push bearish, it could go sideways. The most likely scenario over the next 10, 20, 30 minutes is that there's going to be a correction, a reaction to this overextension. This is the highest probability move. And this is how I get an 80+% win rate, because regardless of where the market goes, bullish or bearish, even sideways, I'm going to make money anyway. And so I'll show you my 3-step process with a trade example that I took early this morning on UJ. As you can see, I took a small reaction price action and I was actually wrong about direction. It continued pushing bullish later on in the day, but I still made 6K on this trade, regardless of where price action was going. And as you can see, it is extremely consistent, the results that I'm getting. And so let's get into this trade. I'll show you exactly how I took it and identified it using the 3-step process. Okay, so step 1 is to make sure you're trading within a range-bound condition. The reason here is that you're more likely to have better and bigger reactions or snapbacks of price action within this condition. And the easiest way to identify this condition is just to look at where you currently are and look back 5 to 10 plus hours and see were you around the same area. It's pretty obvious we've been going sideways for that period of time. And so moving on to step 2, which is to wait for an hourly extension. This part will actually help you time the entry and tell you exactly when to enter down to the minute. So we're just going to zoom into the range and we're going to wait for a new hourly candle to open. And we just want this hourly candle to extend into either the high of that range or into either the low of that range. And so I'll just draw a zone around those lows and a zone around those highs here and just wait for price action to come into either one of those zones. You can see here, we've come into this zone. We've taken out this previous high here, and that moves us on to step 3. Now that we've had an hourly candle open and immediately extend into the high or the low, step 3 is just to wait for an entry model. I just want to be clear as well, it's important how you overextend. And so we want a big stretch of price action to build up all that tension to make it more likely that there's going to be a snapback here. And so for the entry model, I mainly look for this around the halfway point of the hour, around 30 minutes into that hour. And the main entry model I use is just a simple shift of market structure here. I'll wait for price to break a high and then immediately break a low. I look to enter on a pullback to around 50% of that shift. And so I'll just drop down onto a lower time frame and we'll just wait for that shift of market structure. So we can see we're making higher highs and higher lows. That 30-minute candle is continuing to push bullish. And then we have a break of a high here. And then we immediately break that low. So a bit of a shift on the lower time frame. So what you can do is just wait for a pullback towards 50% of that shift. My entry was a little bit late due to that volume. And for my target, it was around 50% of this extension here. And so that's around a 1.3 risk reward. And most likely price is going to have a little reaction for that snapback of that elastic price to release that tension so it can further continue pushing, or it can reverse, or it will range. It doesn't really matter, but most likely there's going to be this little reaction here. And so as we can see, it plays out pretty nicely, comes back into 50%. And then it reverses, continues pushing bullish, but it doesn't really matter. We've already caught our reaction of this nice stretch in price action here. And so for our next example, we're actually going to be trading counter to the direction. We can see that pretty clearly we're moving bearish here, but we're just going to wait for an hourly candle to open within this bearish trending range and overextend into the lower half here, which it does very nicely. And we're going to be looking for something pretty similar to the previous hour, where the open of the hour immediately pushed bearish. And then around the halfway point, you had that little reaction, that pullback. And so we've had the nice extension. Now we're just going to wait for a shift of market structure around the halfway point of this hour, this wick here. And so waiting for a 1-minute shift of market structure. These are the most recent highs here. This is the most recent structure because it was pretty high volume. And so we want to wait for a break of this structure here. And so we have a break of that high here. What we just want to do then is wait for a pullback, wait for price action to come into 50% of this move. We then have another shift within that. This would be an even lower time frame shift here. We can look for an entry here, stop below the low, and we can target 50% of this hourly overextension here for a nice 1.5 risk reward. And you see it plays it pretty nicely. And then you actually have another hourly candle overextend for the next hour or 20 to 30 minutes into the high of this range. Happened a bit early on into the hour, but this move built up quite a lot of tension. And so likely there's going to be a reaction, a correction of this move here. And around the halfway point, you see it shift bearish. And again, continue pushing bearish. And so we can just wait within this condition and wait for an hourly candle to open, overextend in a certain direction, and then shift around the halfway point to have that little reaction of this extension here. And it's so consistent every single day. Okay, same price action again within the same bearish trading range. We've had this hourly candle open and immediately overextend, push bearish here. And this is actually quite a lot of volume. But around that halfway point of the hour, we have a bit of a shift of direction. We break these 1 minute candle wick highs. So we break a new high here. We can look for a pullback in towards 50% of this move. It's in the second half of the hour. We can put a stop loss at that low, and we can target 50% of this overextension here. That'd be a 1.6 risk to reward on average, and taps into that, hits the take profit pretty easily. And we don't care about where price action is going. It can go against us. It can flip, in reverse. It doesn't really matter. We're just targeting the highest probability moves and waiting for this specific type of hourly overextension for price to stretch without a pullback for 20 or 30 minutes. You're just extremely likely to have these high quality moves. The prices has these little reactions, these snapbacks, and it is extremely consistent. And then again, for our third example, you can see we're in a bit of a range here over the past 5+ hours. And as you can see, over these 5+ hours, you tend to have that little reaction, that snapback in price around that halfway point of the hour, especially when you get that extension or just price action moving in a certain direction for that period of time. You are likely to have that snapback. And again, a little reaction here around the halfway point of this hour to create into 50% of this bearish move here. And so in this range again, we'll just identify the highs and the lows of this range. We're at the lows, and the new open of this hour opens, and it immediately pushes bullish into the upper half of this range here. So approaching the halfway point of this hour, we have a nice overextension here. And we can just wait for price action to shift bearish, which we have. We've taken out a high into taking out a low. We can look for a pullback in towards 50% of that bearish move there. And we can just target 50% of the hourly candle to overextend here. And as you can see, taps in and then hits our take profit quite easily. And again, in this example here, if price action was going to shift and push bullish, because you had this extension here, you're likely to have a pullback to release that tension in order to then push bullish. If it's going to reverse, well, it's going to go that way anyway. And if it's going to range bound, well, you're still likely to have that reaction of this previous bullish movement. And so this is how I make money trading regardless of where price action is going, regardless of the direction, because the direction doesn't matter if you're entering at the right time. And this hourly candle extension strategy makes it so you do enter at the right time. I'm able to get a positive risk reward with an average win rate of around 80%. It is insane how profitable this strategy is. And so when you just focus on catching these small reactions, you will get the consistent results you want. And as always, test this out, forward test it, back test it, get some experience with it before you put it into live conditions. And if you want more information on exactly how I use this every single day, just watch this video right here. I go in-depth, deep dive on the actual mechanics of this approach. And if you want any other free resources, my free journal, my free mind maps, or more information on this counter behavior strategy, links in the description or below. Join the Discord, do other free content in there. But hope you guys enjoyed this, and I'll catch you guys in the next video.